The next global liquidity wave is about to hit Bitcoin. And this could potentially bring Bitcoin to a 300,000 US dollar price. Today we talk about that with Bisher Khudeira. He's an expert with the macroeconomy, the traditional financial space, and an extreme Bitcoin bull. We talk about the crazy fact that 1/3 of the US national debt is due this year. That's over 15 trillion US dollar maturing this year. So liquidity has to come back. Printing has to keep on rolling into Bitcoin. Nothing stops this train. We also again talk about gold as a leading indicator, why Bitcoin hasn't performed so good and why it will perform in the coming months and years ahead. And this year, 2026, could potentially shock us all. Enjoy. For the few people that haven't seen you, aren't aware of you, maybe give them a background of who you are and especially why you're excited about Bitcoin.
Awesome. So my name is Bisher Khudeira. I'm one of the managing directors at Stormrake. Prior to that, I was in foreign exchange. So my background and my history has always been around financial markets, at least professionally and within my career. Being really quite closely exposed to the foreign exchange markets helped me understand the fiat currency system quite well. I knew the drivers, I was watching interest rates, I was understanding the macro drivers of what was pushing FX rates across the board. And we were doing a lot of retail trading on behalf of our clients as well. So developed a really intimate understanding of fiat currency through my exposure in FX brokerage. And I just came to realize how little value fiat currencies had, because it was quite arbitrary. You'd be based off what a central banker would say. Monetary policy would change on a dime. Sometimes they were raising interest rates, sometimes they were lowering interest rates. One of the things that was a big eye-opener for me was the Euro Swiss franc depeg. So for a long time, the Swiss National Bank came out and said that they were going to support the Euro franc at $1.20 and said that they're not going to be raising or lowering interest rates. At the same time, this is in one meeting, they turned around and said that we're no longer supporting the Euro Swiss franc peg that was at $1.20, and we are lowering interest rates to negative. So you would be paying minus 0.1 to hold funds within Swiss banks. That move created a 5,000 point drop in the Euro Swiss franc. It went from $1.20, the next print that opened up was 70 cents in a second. Right. And I was like, this is completely arbitrary. It's not sustainable. It's not the way monetary policy should be set. So that was a really big eye-opening experience for me in financial markets. And what got me excited about Bitcoin when I was starting to learn about it in 2015, 2016, prior to making the leap to invest, I loved how the monetary protocol was fixed. No one was going to be changing the monetary policy. The issuance was completely programmed, and then the supply cap was also programmed, and so that all the incentives were aligned, from the miners to the nodes to the participants who would be operating on the public market. Everybody's incentives were aligned, and I thought that was incredibly powerful. I didn't know that it was going to transform into this global macro asset class over the next 10 years. I wish I would have had the vision for it, but what appealed to me initially and what got me excited about Bitcoin is that we can have a genuine monetary protocol that's not at the behest or control of central banks and political pressures.
I love that. That's really interesting, because like I see a lot of people that come from the traditional financial background or from foreign exchanges or from just like seeing how the fiat currency system works in the fiat currency system, that are opening their eyes and they're like, oh wow, that there's something wrong with that. There are a lot of people that just stick with it and they keep at it. It's like, it's normal, like everyone sees it and it's just like nothing is wrong. But like, what made you realize like there's something wrong with that fiat system in being so close in there?
It was the fact that savers got punished was the most difficult part for me to come to terms with. So I come from a Lebanese background. And so you can look at what happened in Lebanon as an example of what is the destiny of all fiat currencies. So during my grandmother's time, when she grew up as a young girl in Lebanon, $1 would buy you 3 Lebanese pounds. But now it's 15,000 Lebanese pounds. And this is the problem with fiat currency, is that overnight you can have an immense devaluation of your currency because your government or your central bank or your politicians bring legislation in, or they drop interest rates, or they do anything. It's outside of your control. And so for me, what was the most disheartening aspect of the legacy fiat currency system is that people who work incredibly hard, who are the backbone of any economy, and then when they save in their local fiat currency, US dollars, Lebanese pounds, Aussie dollars, whatever it may be, the labor that they're putting in, their work, is being devalued. And the amount of runway that they can potentially get in their retirement just erodes away steadily but surely. So that was the part for me that didn't make sense, because you hear a lot of financial literacy podcasts and content say that you work hard, you save money, and that's how you become wealthy, or it's how you can provide for yourself and your family in your retirement. But that wasn't the case. And so as hard as people were working and they were saving, their savings was being eroded. And so it was quite disheartening for me, being in financial services, telling people to come into this space and say, yeah, work hard, deploy your capital, invest into the markets. And if you're a good little saver, you're going to get ahead. But the fiat currency just continued to disappoint them. And that's why people continue to take on more and more risk with their investing or with their trading, because they have to find a way to beat that inflation rate. So for me, that was the biggest eye opener as well.
That's interesting. And everyone that I know is a Bitcoiner from Lebanon says the same thing, that they think what happened in Lebanon will happen in the whole world. But it's only Lebanese people. When you ask USA people or like in Europe people, they often don't think that. I mean, almost nobody thinks that. In Bitcoin also, sometimes people don't think that in there. Is there like a false kind of safety that we have? Because like, okay, now from last week to today, the US dollar is kind of stable, or the euro is kind of stable. And we now think just because it has been stable for like 5 years, it will be also stable in the next years. And how do you think this will actually play out with such a huge country, with America and maybe the Europe and I don't know, maybe the yen, like the G3 nations kind of?
It's already the great awakening is happening now. So we're seeing a massive loss of faith in the fiat currency system. Now, the initial bid, the initial assets that are going to be purchased when the legacy financial system and the legacy fiat currency system, we lose faith in it, people are going to flock to gold and silver first and foremost, because it's been an asset that's been understood as money for 5,000 years. Bitcoin being understood as money or as a monetary protocol has only been around for 17 years. And so it's not as ubiquitous, and it's not as everywhere as some Bitcoiners would like it to be. And I anticipate the adoption will grow. I know that the monetary protocol and decentralization will improve. But if we're talking about the average man and woman in America, in Europe, in Japan, when things get hairy, they're not running towards their brokerage account or their exchange account to buy Bitcoin. When things get scary, when they feel like their purchasing power is being eroded and there's a loss of faith in the savings account that they've got at their local bank, they're going to go towards gold and silver. So the rise of gold and silver should actually be celebrated by Bitcoiners around the world. It's a realization of sound money. It's the appreciation of hard money. Now, whilst gold and silver have been money for 5,000 years and they're fantastic forms of money, they do have certain limitations that I believe Bitcoin complements, or in some cases exceeds in terms of its value. But ultimately, this loss of trust in the legacy financial system is always going to replace or show up in the financial markets, first and foremost in gold and silver. So, and we see every day, new all-time high, new all-time high, new all-time high. Gold is on its way to nearly $5,000 an ounce. It's just shy of 4,900 at the moment. Silver is up over 220% in US dollar terms over the last 12 months. So that loss of faith in the legacy financial system is a boon to Bitcoiners. Whilst it doesn't show up in the price chart, we have to be patient and understand that we don't have 5,000 years of history behind us as a money, but we do have a sound money protocol. And as more and more people wake up and understand their financial system is shortcoming and their savings account is not providing them what they need, they will come to Bitcoin eventually. And that's why I've positioned ourselves in that bucket.
I love that. And I want to show this to you and the viewers because the gold price has been on an absolute winning streak. The gold, like this is just like a website I usually go to if I want to see the gold price. We have now like 4.8, so like we're coming very close to like 5K, which is crazy to think about. I know it hasn't been that long that we celebrated gold over 4K, and I say celebrated even though I'm a Bitcoiner and I have very too little, almost no gold, because I think if gold is doing good, Bitcoin will also be doing good because both are kind of in the same sound money bucket, especially from the narrative perspective. And yes, a lot of people still view Bitcoin not as that sound money narrative and more as a tech play, as like a high speculative thing. I feel like it's slowly changing. I don't know, it's very unrelated, but have you seen like the Harvard University endowment like buying Bitcoin like last year, and they put it in the same bucket as gold, which I found very interesting. I think it's like so slowly those snippets are eating away that people are actually seeing Bitcoin in a similar bucket than gold. But anyways, I just wanted to say, show this because this is the 1 year chart of gold price. And we have been ripping from, I don't know, 2.8, 2.7 from beginning of January last year to now almost 5K. That's insane. Like I did not anticipate that at all. I don't know how you think about that. I mean, now we see it here, I think 75% plus, while Bitcoin has been gone down like 5-10%. How do you see this like relationship between gold and Bitcoin? And a lot of people seem to be the conviction of that gold is actually a leading indicator for Bitcoin because exactly of what you said, because Bitcoin isn't as understood as the sound money thing, but gold is. And if things look not that good, central banks and institutions and bigger people buy the gold to be safer in the future.
Yeah, I mean, we believe in gold as sound money. I think it's, for me, Bitcoin in general is one of my main and primary holdings, and I believe in Bitcoin, but we operate a gold Bitcoin fund. We believe that people who are going to come into this sound money narrative are going to require multiple on-ramps, right? Bitcoin is a on-ramp into sound money. It's an exit from the legacy financial system. It's an exit from the fiat currency system, and as is gold and silver. So for me, I don't see them as competitors. I think that a lot of the gold bugs, they kind of they don't like Bitcoin very much. You know, there's some very outspoken critics such as Peter Schiff, and then on the other side of the spectrum, you have Michael Saylor, who would say sell your gold, buy Bitcoin. I believe in to allow the average man and woman to exit the legacy fiat currency system, which is what they've known for generations, right? They've known this for generations. You're going to require a multi-pronged approach and multiple off ramps. I believe Bitcoin is an off ramp. I believe gold is an off ramp. So for young millennials who have disenfranchised, can't get onto the property ladder, never had the opportunity to have a meaningful savings account, Bitcoin is the better option. But for your boomers who are heading into retirement or enjoying their retirement, the Bitcoin volatility might not be something that they can yet understand or appreciate, and maybe have the time to be able to absorb as well. So volatility is a gift to Bitcoin, but that volatility requires time and endurance. And so if you don't have that time afforded to you, the best off ramp in that case is gold. Now, this isn't to say that Bitcoin doesn't fulfill that role. I'm incredibly bullish on Bitcoin. 99% of my net wealth is in Bitcoin personally, but I know from dealing with people who are going into retirement or living and enjoying their retirement, the volatility profile of Bitcoin can be something that can be quite intimidating, which is why I understand Michael Saylor's approach with MicroStrategy and all of the new financial products that they're engineering is to provide on-ramps into Bitcoin that look like a credit instrument, look like fixed income, looks like an equity product that they can know and understand and get a reliable dividend. Because when you're in that period of your life, you're not really chasing capital growth, you're more so chasing capital preservation and income. So my ultimate thesis with the rise in gold, the rise in silver, the rise of MicroStrategies, different credit products and financial instruments that they're introducing towards the market, is just bringing in pipes that can then siphon capital away from the fiat currency system. That capital is not being treated well. That capital is being mistreated, is being inflated, is being losing value at a rapid rate. So you just plug it into different ways that make sense for the individual who's coming to enjoy that product. Your finance guys, they're going to want something with yield. They want something that's income generating. So that's where some of MicroStrategy's products make sense. For some of the retirees who, have never really come across digital assets before, gold and silver might make more sense. And for people like us, young, ambitious, able to build businesses, have the capacity to produce income, we've got 20, 30, 40 years of our career in front of us, Bitcoin is the perfect solution. So, and I think it's important that when you approach financial markets, you never have a 1 and 0 approach. You never just have a binary thinking. You need to have a nuanced approach to capital markets in order to make sure you get the most out of it. And that's where Bitcoin is going to succeed. It's where Bitcoin will go from a $2 trillion asset class as to where it is today to a 20, 30, 40, $50 trillion asset class and exceed $1 million per Bitcoin is when it matures and becomes that sound money that we all know and appreciate it. And we have a nice wide distributor base that is, or holder base that is holding that. So we're seeing a lot of distribution of Bitcoin over 100,000 because the old guard, the OG Bitcoiners are now distributing their Bitcoin. We're going to see a very similar liquidity event with boomers. The boomers are going to come through. They've been holding their gold for 20, 30, 40, 50 years. They're going to have a distribution event at some stage as well to realize some of those gains and enjoy the rest of their retirement. So for me, I'm a simple thinker when it comes to capital markets. The more options that you have for the everyday investor to exit the legacy system, the better Bitcoin will perform.
I love that. And I want to just briefly touch on MSTR because I, for the longest time, have been always saying, I rather keep Bitcoin in self-custody. I don't want to touch stocks again. And I had that belief even when I had Sailor on my podcast. I had that belief interviewing so many different strategy maxis and like treasury company people. And recently I've changed my opinion slightly because of Stretch. I think Stretch is such a interesting product, not for me myself. Like I don't want to invest in Stretch, but I know it has a huge total addressable market, way, way bigger than it is right now. And seeing Stretch trading at par after the dividend day in a downwards market of like, what? Like that felt unbelievable. And then being able to pay out like an 11% yield. If that product can sustain itself for like 1, 2, 3 years, the TradFi people will flock into that because it is so much better than any other fixed income product out there. And they might actually be able to like raise that yield even further a little bit. And so this made me actually just step my toes a little bit into MSTR because I think they found a really interesting product with Stretch. How do you look at Stretch, especially coming from the TradFi space, and then having a product that very safely, not risk-free, but very safely gives you like an 11% yield at the moment?
It's very attractive, and I understand why it has traded at par and why they have come up with so many new products, Stretch, Strike, Strife, Stride. They're trying to find product market fit, and they've got the Bitcoin balance sheet in order that can afford that experimentation. But like you said, it's not for me, and it's not for majority of investors, but for the fixed income crowd, it's very attractive. And after a few years of it becoming battle tested, there's going to be a bunch of capital inflow there, that's where Saylor starts talking about his Bitcoin flywheel, which is understandable. But for the average investor, for the person who may be just watching this in their car on their way to work or whatever it may be, you're far better off with Bitcoin and self-custody, right? That's something that I'll always advocate for. Now, if you've got some capital that you want to explore and experiment with, then exploring these kind of products might be of interest for you. But if you're just wanting to get exposure to Bitcoin, ETFs are a nice vehicle, but not the purest way to go about it. I believe that Bitcoin in self-custody and also Bitcoin being circulated in the economy is the way that we will win as a money. Because for money to become understood and for a new form of money to become ubiquitous, we can't just have it hoarded on balance sheets. We can't just have it hoarded in ETFs or sitting in cold storage wallets and gather UTXOs gathering dust. We need to see velocity in the network. We also have to understand and appreciate that in the year 2140, by that time we'll be long gone, but we need to see Bitcoin, the network, become incredibly active, right? We need Lightning to be successful. We need Bitcoin mainnet to be successful, the base chain to be successful, because if we don't, that block subsidy, when it disappears and ends and we reach that final 21 million Bitcoin, we need to have an active network in order to see Bitcoin thrive and succeed long after the block subsidy is finished. So there's two things that we as investors or as Bitcoiners truly have to advocate for. So yes, Bitcoin in direct cold storage is important, but we don't want to hoard. We don't want to vault. We need to see Bitcoin in businesses. We need to see, this is why I love the Steak and Shake story far more than the MicroStrategy story. Whilst MicroStrategy has been incredibly successful and can never take anything away from what Saylor has done for the space and how much capital he's brought into the space, it can never be questioned. But in terms of what's going to benefit Bitcoin, the protocol, Bitcoin, the monetary network, the most is not everybody just hoarding Bitcoin and just having synthetic exposure through Saylor's credit instruments. It's actually going to be Bitcoin circulating through the economy. Businesses like Steak and Shake, your local mechanic, your accountant, all accepting Bitcoin for services and for goods and products. That's what's going to help us become successful. That's what's going to take us from a niche internet monetary protocol that a few million people believe in and a $2 trillion asset class to something that's going to make us the dominant monetary protocol utilized around the globe. That's what's going to make us successful. It's an interesting transition, but it's the store of value argument has allowed Bitcoin to grab some investors through the door. But let's stick to what Bitcoin's original white paper aimed to achieve. It was an electronic peer-to-peer cash network. That's what it was. And this is why I agree with Jack Dorsey, which is if it only becomes a store of value asset, then Bitcoin as a protocol has failed. And I completely agree with him on that because my background was foreign exchange. So I understand that wherever people go, they're going to accept the Thai baht in Thailand. They're going to accept the Vietnamese dong in Vietnam. They're going to accept the Aussie dollar here in my home country of Australia. They're going to accept the American dollar in America. But we need a completely global, neutral monetary protocol to service the 8 billion people that live on this planet. And that's what's going to take us to become $1 million plus a coin, $2 million, $3 million plus a coin. It's not if everybody just hoards it, never sells, hodl, never sell, hodl, balance sheet asset, and then get synthetic exposure through ETFs and credit products. It's only going to work when it becomes a ubiquitous form of money.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relai to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relai, the app, on your phone or go to relay.app on your browser and use code Robin
to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I love that. And I very much 100% agree with that. And it's interesting, how much of that belief has the Lebanese experience? Because I think if you live through something like what happened in Lebanon, you're more likely to be a Bitcoin maxi that thinks also about like self-custody and using it actually as a medium of exchange than when you just like live up in a very protected currency that hasn't had a huge hyperinflation. Like, I mean, to a certain extent, all currencies have had a huge inflation in the last like 10, 20, 30 years. But it's not as bad if it's like 5% a year or 7% a year than if it's like 100% in a month or something like that.
Yeah. I mean, even if we go to 5-7% a year over, 10, 20, 30 years, it means that you've lost almost half of your purchasing power over that period of time. So that compounded loss is quite painful. The story that affected my family back home in Lebanon played a role, but even myself personally, I've experienced debanking, right? We don't talk about that very often. So as a Bitcoiner here in Australia, the big banks, they don't really like us very much. If you're investing in Bitcoin, you're using Bitcoin, you're using Bitcoin exchanges or brokers, they almost always debank you. So one of the largest Australian banks here in the country, I had an account with since I was 10 years old, like a child savings account. And when I was in Thailand, they terminated my bank account. They sent an email with saying that I have 21 days to move my funds off their bank because I'm no longer going to be serviced by them. Thankfully, I only had a couple of $1,000s in the bank account at any one time because I just don't believe in fiat banking and fractional reserve banking at all. But I was able to get my funds off. But when I was in Phuket, which is a beautiful island in Thailand, I was able to go to the heart of it, which was Patong, Bangla Road. And there was a Nepalese guy who owned a suit shop. Get this is crazy. This is how awesome Bitcoiners are. This guy runs a suit shop in the heart of Phuket. And at the back of the shop is a Bitcoin OTC desk. So he converts Bitcoin into Thai baht. So I came in there with 0.03 of a Bitcoin. And at the time, I was able to walk away with 90,000 Thai baht. 90,000 Thai baht. It's equivalent to about 3,000, 3,500 US dollars. It's the currency there is hyperinflated, but it was an incredible experience because I was dealing with the legacy banking system kicking me out, saying you will no longer have a bank account at our institution because of my Bitcoin-related activities, and then Bitcoin itself was able to provide me liquidity in a foreign nation where I was with my wife and my children having a little family holiday. So this is for me, it's also a lived experience. It's not just because my family got affected by it in Lebanon. They went through that situation, yes, and I was able to support them with Bitcoin. But it's deeply personal for me, Bitcoin as a medium of exchange and Bitcoin as a globally recognized currency, because in a situation where I couldn't access my legacy bank account, Bitcoin stepped in and provided me the opportunity to continue the family holiday uninterrupted. And so BTC is the king for that reason, and I hope it can continue to grow on that basis, because that's when it will truly succeed.
Yeah, that's why I also love peer-to-peer exchanges, Bitcoin ATMs, even like the value of having just a Bitcoin ATM somewhere sitting where you are, and you get thrown out of your banking system in your state where you are. You can literally just go to a Bitcoin ATM, plug Bitcoin in there, and you get the local currency out there, and they don't even know about it. Like it's so easy and so good. Where we need more of those facilities where people can just trade in every single country their Bitcoin for local currency. So they're always banked, especially in the meantime, where not a lot of merchants now accept direct Bitcoin. There are, of course, I think, what was the number? 26,000 merchants around the world, which is huge, but it's still limited. Like you have to go to special places to like give them your Bitcoin, which is crazy. I think if people understood more what Bitcoin is, I think a lot more people would accept Bitcoin, less fees, stronger currency, all of that. But we need those in the meantime, those like Bitcoin ATMs, like those peer-to-peer things, like just like so you can live off fiat local currency when having Bitcoin in some other country.
Yeah, absolutely. And we need better fiat on and off ramps in general. I think if we're always just going to be limited to the Bitcoin and or crypto exchanges to be able to convert fiat, it's a bit of a centralized honeypot, in my opinion, especially with how difficult it is sometimes to get Bitcoin off some of these exchanges. So we want a variety of ways that people can access the market. So we provide a brokering service. People can go to peer-to-peer ATMs. So I believe the exchange experience is not exactly ideal as well, because the average investor comes into the Bitcoin market, wanting to get access to BTC, and then they see a flurry and a litany of other cryptocurrencies, and some of the listings that come onto these crypto exchanges are insane. There's no forethought, there's no vetting. They just list and give exposure to traders and investors. Now, a decentralized exchange is different. If there's a smart contract and people are trading their Ethereum for Pepe, Sheep, whatever it is, some flavor of the month, shitcoin, then that's fine, because there's no one that's made the decision to list it. It's just the DEX, and people can trade these worthless tokens with each other. Whereas if you look at, for example, exchanges, they have a responsibility to assess what it is that they provide clients access towards. And so for me, it is important, whether it's ATMs, peer-to-peer, more Bitcoin merchants, or merchants that accept Bitcoin for payment for goods and services, brokerages, that variety of on and off ramping methods is part of that wider thesis that I was talking about before, which is we want to see a variety of people exiting the fiat currency system and moving into sound money. The more variety there is, the better likelihood Bitcoin has to succeed, because we need to see people using Bitcoin in a variety of different ways. Store of value, balance sheet asset is definitely a big one, and it fulfills it very well. But we need to see medium of exchange. We need to see it as a way to be able to get access to local fiat currencies, as you had just described. So yeah, the great thing about Bitcoin being a digital asset is that it can't just be one thing. And I think that's important for us to understand. And when I convey this message to clients, and I talk to thousands of Australians every single month about what Bitcoin can be, we can't just pigeonhole it. Because it is a digital asset, because of its finite nature, it can be used in many different ways. Store of value, medium of exchange is pristine collateral as well. It's the best possible form of collateral that one could have. So whether a nation is wanting to back their bonds with Bitcoin, or a lender wants to receive Bitcoin in order to lend out capital for it, it is the best way to go through that whole process. And because of its divisibility, you can liquidate portions of it to get the loan back in health. So there's so much that Bitcoin can provide, and that's why I believe it's undervalued. It's because we haven't even tapped into all of its use cases yet. And so people talk about Bitcoin has no use case, Bitcoin has no utility. In a digital world where fiat currencies are ubiquitous, and we're seeing massive rampant debanking, and we're seeing massive inflation, Bitcoin in its different forms solves all of those problems. So what's the price point that you can have for a solution like that. So, but in my eyes, we're trading well below par, well below its value point, because in my eyes, a base money that can be able to protect and provide for all of these users is quite a useful asset. That's why we see, even, politics aside, it's why Venezuela, when they were doing oil deals, they were receiving USDT, but they would convert their USDT into Bitcoin straight away, because Tether can be seized, it can be frozen, the tokens can be pretty much killed straight in your wallet. So they can't control the wallet, but they'll control the tokens. That's not decentralization. That's not freedom. Again, I'm not making a political statement about Venezuela skirting sanctions. I'm just talking about freedom money. And so if we're using currencies for using Bitcoin as a way to trade goods and services at a micro level, I go into a coffee shop, get a coffee, get a sandwich, that's a micro level. But on a macro level, on a much larger nation state level, Bitcoin, in a multipolar world where the Europeans don't trust the Americans don't trust the Russians don't trust the Chinese, no one trusts each other, Bitcoin will come in and plug that gap where there's a complete breakdown in the FX markets, a complete breakdown in the euro dollar market, a complete breakdown of the bond market. Bitcoin will plug those holes and allow that capital to escape. And that's when you'll see a massive revaluation in BTC. It's because it is the ultimate monetary protocol, especially in a fractured multipolar world. BTC will come in and save us and provide us some sort of stability.
And I think this is the perfect case for the debasement trade. And I think it's quite telling actually that the debasement trade is now in the mainstream finance kind of coming in like the last year and this year. And I think just like Bitcoin in self-custody is the best way of doing that. How do you actually look at the macro picture? We've seen in 2020, I was like woken up to like the huge amount of money printing that was going on. I was not aware of that. I think the number was 40% of all the supply was printed in 2020. From all the supply that was printed beforehand since 1971, which I was like, that seems to be a big number when I first discovered it. How do you think about the macro picture and what changed maybe also in 2020?
So there's a tailwind and a headwind that we got to unpack from a macro perspective. First of all, we talked a lot, and I talked a lot about what I believe Bitcoin will become. But right now, Bitcoin trades as a high beta tech stock or a technology play. That's how it's traded, at least at an institutional level, and how we've seen it trade over 2025. It's treated as a risk-on asset, right? So I can talk about what I believe Bitcoin will become, but the reality on the ground, at least upon the large players in the capital markets and financial markets, is they see it as a risk-on asset. So as a bit of a headwind that's working against us, whilst Bitcoin has this risk-on asset perception, we're seeing the Japanese bond yields absolutely spiking through the roof. And for the last 15, 20 years, Japan has been the world's cheap credit factory because interest rates was nearly 0%, right? And so you could go there with billions of dollars, borrow against it at near zero rates, and then deploy that capital. With $1 billion, you can borrow twice as much. You've got now $2 billion and you're spending close to nothing financing that debt, and you're putting it into assets that get you a better yield. American assets, stocks, bonds, even Bitcoin benefited from that carry trade, what was known as the yen carry trade. But as these bond yields continue to spike and spike and spike and continue to rip up, then what's happening is the people who took out these massive loans are now having to pay back a significant amount of interest. So they're going to sell assets in order to shore up their balance sheet to match those liabilities that the cost of that debt is now increasing significantly. So that's working against us, because the first liquid asset that these bigger investors and bigger TradFi people will reach to is Bitcoin. It's very liquid. It's very easy to dispose of. It's a 24/7 market. So when the borrowing costs increase significantly and they need quick cash and they can liquidate an asset, they're going to go to Bitcoin first. They're not going to go to their commercial real estate projects. They're not going to go to their long dated treasuries. They're not going to go to their metals complex. They're not going to go to some of the equities. They'll go first and foremost to Bitcoin. Then they'll go to equities. Then they'll go to metals. Then they'll go to bonds. Then they'll go to like commercial real estate that's hard to dispose of and is an illiquid asset. So that the Bitcoin liquidity and its availability kind of works in two ways. It can really run and it can really work against us. So now that the bond yields have been completely ripping through the roof, and all of these massive investors who have been leveraged up to the hilt are now having to sell assets in order to pay down liabilities, and cost of borrow that has increased significantly. I think that's working against us from a macro perspective. That would give us the opportunity to accumulate cheaper Bitcoin, but we saw some of that repricing, or that the effect on that on Bitcoin over the last 6 months, and it might not get any better anytime soon. Just the other day, Japanese long-dated bond yields jumped almost 8%, right? Almost 8% on the day. It was massive gains. And so that means that the bonds are getting smashed, cost of borrowing is ripping through the roof. There's the Japanese government has the threat of being dissolved, so that's going to also add pressure to the yields as well, increasing cost of borrow. So that's working against us from a macro picture. However, here's where it gets really attractive. I see a lot of people circulating the 2021 Bitcoin fractal, how we had that double top and then we rolled over, we had the bear flag, and then we spilled over another 50, 60%. And that's been circulated on Bitcoin Twitter, and people are freaking out. Are we replicating that again? We have to keep in mind the macro context that occurred for Bitcoin to go from 70,000 to 15,000, and was one of a pretty savage bear market, was because we went through the fastest interest rate hikes globally over the last 50 years. The Federal Reserve went from 1 or 2% all the way up to nearly 5%. And now we're seeing them, and that during that time as well, they were tightening their balance sheet. So they were not adding any more treasuries to their balance sheet. In fact, they were letting it unwind. So they weren't rolling over any new US Treasury bond exposure, which would usually mean they print a boatload of US dollar currency to buy back the bonds. So now they've actually started to drop interest rates, and we're starting to see the US Federal Reserve starting to expand its balance sheet again, which means it's injecting liquidity into the system by buying treasuries and adding it to its balance sheet, therefore stabilizing the bond market, dropping yields, and intervening in some form of yield curve control. That's a very different macro setup to where we were in 2021 compared to 2026. We're doing the inverse. Instead of raising interest rates, we're lowering them. Instead of rolling over treasury exposure, we're adding treasury exposure on the Federal Reserve balance sheet. So whilst we have this push and pull dynamic from the US being very accommodative and Japan being a little bit difficult because of its huge debt load, I would still say that we're facing more positive headwinds than more difficult headwinds. But that's why we've seen Bitcoin really flat over the last 12 months. So whilst we've had a lot of institutional adoption, a lot of increase in Bitcoin usage, we're struggling with that. And that's why we've been flat, because we've got this positive risk-on environment in the US and this negative risk-off environment in Japan, where it's been cheap credit for massive institutions for nearly 20 years. That resolution of that carry trade, when it resolves itself, that's when we're going to see Bitcoin really play catch up to global liquidity and run to 200, 250, 300K US in a very quick period. So those are the things that we're dealing with from a macro picture. But again, it's short-term uncertainty and noise, because the Japanese government, and certainly the Bank of Japan, and even the US Federal Reserve, doesn't have any other choice other than some form of yield curve control, some kind of yield curve intervention, because they cannot afford to have the US government or the Japanese government become insolvent, because the US government itself is now having almost a third of its debt maturing in 2026. $7 trillion worth of debt matures in Q1 2026 itself. So they need lower bond yields, and that will be accommodated by the Federal Reserve as much as possible so that they don't run their government into insolvency. And that's why I bet on Bitcoin, because they'll print fiat currency, buy back the bonds, drop the yields in order to support and accommodate their reckless deficit spending.
So you expect a lot more printing or liquidity, however you want to call it, in 2026 compared to other years? Yeah,
there's no other choice. The US government has a third of its debt, and it's nearly $40 trillion in debt, $38.5 trillion in debt. a third of it comes good in 2026. You mentioned COVID before, when you were seeing, disarray in capital and financial markets. A majority of the liquidity that was injected and a majority of the debt that the US government took out, you talk about how they printed almost 20% of the US dollar supply. Why were they printing so many US dollars? Is so that they can support the government's policy of lockdowns and support the economy during a period of massive disinflation. They were worried about the economy completely collapsing. We saw oil go negative. So they printed so much currency, 20% of the total supply, in order to buy bonds and stabilize the economy. So it's not a matter of belief, it's a matter of function of markets. They cannot afford the treasury yields to continue to spike the way they've been, because a third of its debt, nearly $15 trillion of debt, is owed in 2026. Now, if they do the same stunt again and print a bunch of currency to buy back their own bonds, they're buying them at much higher interest rates. So their financing costs have gone up significantly. The interest on the debt in the US for the US government is nearly $1 trillion. So they have no other choice other than to deploy some form of liquidity injection, currency printing, yield curve control, quantitative easing, whatever they're going to call it, right? Bank term funding program. We saw that in 2023 with the SVB crisis. They're always going to give it some sort of acronym, but ultimately what they're talking about is just pure outright currency printing in order to support the US government's deficit spending. And that's why we're seeing so much politicking between Trump to Powell and all of this posturing around Greenland and all these other types of tariff deals, is that they're trying to shore up capital into America and make America look very strong and powerful in order to get a bit of a strong bid on US bonds. Because if everybody thinks America's great and America's going to be great for a very long time, then they're willing to buy and accept the inflation that comes with the US dollar, because the US bonds can at least hold value over time. So there's a lot of politicking going around, and people see the headlines and what's happening. They see Venezuela, they see Greenland, they see EU tariffs, and all of that's what the headlines get reported on. But why is that occurring in the first place? Is because the US government is aware, and most of the financial market professionals are aware, that $15 trillion worth of American debt is due in 2026. So they need to create a macro or a financial environment that's accommodative for bonds, so that there can be a stronger bid on bonds, drop the yields, and again, be able to lower their cost of financing this massive debt load. And that environment is where I anticipate Bitcoin to do incredibly well, because we just have to look back to the last time that there were significant liquidity injections, whether that be 2017 or 2021. That's when Bitcoin has performed best. And that's what I'm happy to bet on, because of the massive monumental debt load that America is under right now.
So we have a similar setup than we had 2017 and 2021, basically, where they just cannot print the currency. they have no other options than print massive amounts of currencies. And then it's also interesting because then gold was the leading indicator. It's also because you mentioned it, Paul, I think he will be gone soon. I think that's like pretty certain at this point. And it's an interesting move to be so strict and be so let's not overdo it now, because he knows probably that he will be anyways gone, and then a lot of money will be printed afterwards. Inflation will of course rise with that. Maybe it's just his play of saying, hey, I tried everything, and then the guy after me made the inflation, not me. It's like his political move. I don't know. It was just a thing that I just thought about.
Yeah, definitely. I mean, look, there's always going to be some sort of politicking going around, particularly around the Federal Reserve, when you have a year such as 2026. It's a monumental year for the US government. It's also a midterm. There's midterms coming up as well, so there's a lot of political pressure to bring cost of goods down, keep inflation down, but at the same time they need to drive interest rates down, and they need to be quite stimulatory, which would usually lead towards inflation. So they're in a bit of a tough spot, but ultimately all solutions and all options lead to some form of currency printing, quantitative easing, whatever you want to call it, liquidity injection. That's what's going to end up. So you're absolutely right. Jerome Powell is trying to hold off so that, he doesn't say, I'm the one that created this hyperinflation event. Then Trump's fall guy comes in, he brings in someone like Kevin Hassett, comes in as the Federal Reserve, and then he's the one that triggers the hyperinflation event. Again, it's all speculation and conjecture. I'm not sure exactly how it will play out. I don't call myself, I'm not trying to predict the future. I just understand incentives, right? I don't know. I think it was Warren Buffett who said, show me the incentive and I'll show you the outcome. The incentive right now across the US government is to get their debt costs and borrowing costs down to as much as possible, because they've got a third of their debt maturing in 2026. So there will be some sort of accommodative policy, and gold is sniffing it out. That's why gold has gone from $2,800 to nearly $5,000 over a 12-month period. That's why silver has gone from $30 to nearly $100. Most of that move coming over the last 6 months, and then Bitcoin will then play catch up as people move from that risk-off environment to a risk-on environment. Bitcoin will go from 90K where we are today, north of 200, 250, 300. And this is not me being a Bitcoin moon boy and calling for higher prices just for the sake of it to make a nice soundbite. This is me having utmost conviction in where the macro picture is. I just know that the US government cannot afford it, and then they will have some form of yield curve intervention.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. That's crazy. I'm really looking forward to this year because I think we have a perfect setup for Bitcoin. We have a very interesting year in front of us, and it will be an amazing year to be an observer of Bitcoin, a participant in Bitcoin, an investor in Bitcoin, in whatever you want to call yourself. And so I'm really looking forward to this year and seeing what Bitcoin can bring to us.
I agree. I think that a lot of people have dismissed Bitcoin over the last 12 months because I believe that there's a culmination of factors. You've had the 4-year cycle, you had the underperformance that you have seen over the last 6 months. We saw the stock market absolutely rip up. We saw gold, silver rip up, and then there's been this weird middle child, Bitcoin, not being able to keep up with risk assets such as stocks or keep up with risk-off assets such as golds and silver. That has led towards some of the frustration, but ultimately I remain incredibly positive because the environment, the way that the macro environment has come in at the same time as sky high institutional and corporate adoption, at the same time as large geopolitical and global unrest, it is really the perfect storm. So Bitcoin and cold storage is not just a catch cry to be able to, not trade anything else and become a Bitcoin maxi and you can't touch any other investment. It's about being able to take a long duration bet on where the world is heading. That's why Bitcoin in cold storage makes so much sense, because you're not trying to speculate on it. You're not leveraged long. You're not trying to do any kind of funky Bitcoin product like Stretch or Strike. You're just getting the pure Bitcoin, that the bet is that it will hedge yourself against the currency debasement and inflation over the long term. You can afford the volatility over the next few years, and then you'll wake up to Bitcoin at 200, 250, 300. It's a fascinating time to be in the market, and seeing Bitcoin grow from this speculative niche internet asset over the last 10 years to now being a global macro asset that commands the attention of the globe, rightfully so. It has been really interesting to watch. And everything that gold and silver is doing now, and I'm super pumped for the run in the precious metals. I know that Bitcoin is going to, on a percentage basis, boggle the mind even further.
I wanna talk about something fun towards slowly coming to the end. I want to talk about Bitcoin culture, and we've gone through the phase where Bitcoin in the beginning was, I think, mostly for either cypherpunk nerds or for really hard Austrian economic nerds. So either someone that is really into cryptography, or someone that is really into the Austrian economics, like Seyfried and all of that, or Max Kaiser maybe is. I think Max Kaiser was one of the first, or maybe the first kind of more mainstream kind of a guy, very early on in there. And I think most can agree that he's not that mainstream in his behavior.
No, he's very alternative.
And it was interesting for me to see the development of Bitcoin. I think we're living through the growing up phase in Bitcoin. There's now more and more, and that's why I wanted to talk about that also with you. There's more and more people in suits now in Bitcoin. There's more and more people that are serious about money and about coming already from a good financial background. For example, Grant Cardone entered Bitcoin in a big way. I know he had Bitcoin since probably 10 years. He was on the podcast, he told the story, but publicly he entered Bitcoin basically last year. Before that, he really never talked about it in a big way. And so we have now those bigger people. I mean, even Michael Saylor, I think, it was a big shift in the Bitcoin culture. Him being a billionaire, the longest lasting CEO of an IT company in the publicly traded market. That's a very big transition into Bitcoin culture. How do you see this Bitcoin culture now shifting as TradFi and people that actually have degrees and have knowledge in the fiat economy is now waking up to oh wait, Bitcoin is actually very interesting and not this niche, nerdy, speculative thing that I thought it was? How do you see the Bitcoin culture now already being progressed the last I think 10 years that you have been in there, but also in the coming years being, I don't like to be generalistic, but more suits into the game, not even talking about yourself.
I mean, speaking of the suits in the game, I'm definitely one of them. But in terms of how it all operates and the change in Bitcoin culture, it speaks to the maturity and the growth of the asset class. It's not that Bitcoin itself will ever be a suits asset. The great analogy that I can give is gold, not just because of similar characteristics and properties as hard money, but gold is stacked by central banks, by institutions, by corporates. You're seeing Ray Dalio spruiking gold quite recently about its virtues and its benefits, and you're seeing institutions increasing their gold allocation. And then you have mum and dad investors who want to protect themselves against inflation, and then you've got the preppers who are hoarding tin cans and bullets and guns and gold bars and silver bars inside their underground bunker. So you have everything from the suited central banker who's just master of the universe, right down to fringe society stacking tinned food and guns and bullets and gold and silver. So it's a global macro asset class. So it serves and is utilized in many different ways. So the adopting and or say let's call the changing culture is not really a change in the Bitcoin ethos, which I see a lot of people being concerned about. Corporate America stepping into Bitcoin, and all these suits, including myself, coming into BTC, and all these bigger financial firms coming into Bitcoin as some sort of change in Bitcoin's culture. It is an evolution, and it's not a good thing nor a bad thing, because you want to see Bitcoin in the hands of many different people. You want it to become a ubiquitous global asset. So you want it to become financialized in boardrooms and discussed as a capital asset allocation in hedge funds. You want mum and dad investors having exposure to it. You want the cypherpunk that it anticipates some sort of global catastrophe to have exposure to it, because Bitcoin is for everyone. And if we have that culture where Bitcoin is for everyone and everyone can involve themselves in Bitcoin, that is a much better probability that Bitcoin will be successful. And you just have to look at the varied users and holders of gold to understand where Bitcoin's going. The suits love it, the hedge funds love it, the central banks love it, all of these big players love it. Then you've got the mum and dads, you've got the preppers, you've got everybody that loves gold, right? The same thing is going to happen for Bitcoin, which is this shift in the culture. Yes, it's no longer very niche, but that's a good thing. If it becomes ubiquitous and acceptable, and you have all types of people from many different political ideologies coming in and all using the same monetary protocol, that's a good thing, because that's my big bet. My big bet is that Bitcoin is the great unifier. It doesn't mean we're all going to get along. It doesn't mean we're going to all become friends and we're all going to see eye to eye, but at least we have a trustless medium of exchange and a store of value that can help us transact across borders and even peer-to-peer. That's my big thesis. So yes, culture has changed significantly, but that change is just a sign of the distributed and much wider holder base that Bitcoin now has.
I think so too. And I think it's actually a positive sign, because if you think about what is the alternative, it's the alternative that the elite, the politicians, the bankers, the governments really hate it, and we have to basically build an underground economy. I think that's the alternative that we're looking at. And I rather live in a world where politicians and bankers actually accept it and have a positive view on Bitcoin, because I know they can't change it. They might want to change it, but they can't. And so I rather have Bitcoin as something that's actually there, and not having to, we have so many different benefits from that. You're less targeted with the taxes. You have better access to financial products and services with banks, and you're not the weird one when it comes to meeting with old friends or something like that. There are a lot of small indirect benefits from having the mainstream action in Bitcoin. I think just Bitcoiners are afraid of that, because they have been in this smaller circle of Bitcoiners, and now everyone comes in and you're like, oh wait, we have been talking about the governments and the central banks and the corporations coming into Bitcoin, but now that they're coming into Bitcoin, we feel frightened and almost what happens to us now? I don't know, it's a weird combination.
Yeah, well, we'll see it at the Bitcoin conference. So I'll be seeing you in Bitcoin Las Vegas, hopefully. And you're going to see the suits, you're going to see the cypherpunks, you're going to see the hoodies, you're going to see the t-shirts. I know Jack Mallers has built a bit of a persona about the guy in the hoodie and how he presents, complex financial ideas and distills it. So that's what I love. Bitcoin's for everyone. You've got even energy TradFi guys who love Bitcoin mining coming into the space now as well, because they understand how efficient Bitcoin can be, especially as you add it to your mining operations. So I love this. I love the change. I love the adoption. It's always something, because for me, as running a brokerage here, I speak to so many different people on the phone that it's I speak to people who are investing for their retirement funds. I speak to people who are speculating on it becoming $10 million. I speak to people who have never had exposure to any sort of digital asset before, and they're just dabbling for the first time with a $5,000 purchase. So there's such a variety of people coming through into the space. It's actually quite encouraging. Even some of our investors are speaking to, how can I involve Bitcoin in my small business. We have a dentist that is based in Sydney who has just learned how to accept Bitcoin for payments. So when you go to this dentist after you get your nice set of teeth done, you can go in and you can pay on card, or there's a little QR code. So that's quite positive, right? It's not those, and she's just a simple, humble woman, worked her entire life in dentistry, and now she's accepting Bitcoin for payments because there's ways that she can do that. And that for me, that change in culture is quite nice, because you're now having everyday people come into it and it becomes more acceptable. So I agree with you in that regards.
I love that. Really cool. We have one question that I ask each and every one of my new guests on the podcast. And the question is, what can we learn from you besides Bitcoin?
Oh, me? My major thing is jiu-jitsu. I love jiu-jitsu. I train Brazilian jiu-jitsu. I try to get in at least 4 or 5 sessions a week. So if there's anything that you can learn from me outside of Bitcoin, it's sport and athletics. That's something I've always loved and appreciated as a way to stay fit, because I've got a desk job. I'm always at my desk. I'm always on the phones. So it's nice to get out of the suit, get into my my gi, my rash guard, and go in and just do some jiu-jitsu and wrestling. It's like the opposite of being a Bitcoin broker. It's it's just nice and energetic and sporty. So for me, one thing you can always count on, if you catch me at a conference, if you say, hey, let's go for a roll, that's something that I'll always do as well. So I love that. That's for me.
I love that. How did you get into this? Like, because you just want to do explore something new, or?
Yeah, just I was always just going into the gym and, just the same thing, doing squats, bench, deadlift, all that kind of standard exercise. And I wanted to do something a little bit different. One of my mates got into jiu-jitsu and he said, come along, have a session. And I fell in love. So yeah, that was kind of how I got introduced to it as well.
Still going to the gym as well, or is jiu-jitsu enough strength?
It's definitely enough. It's something I greatly enjoy. I haven't, to be fair with you, the way that the markets have been over the last 6 months, I haven't been training as much because I've just been coming into the office every day and come in at 8 and I'm finishing at 8. So I miss my evening session. But yeah, it's the only thing that I really do these days is just go out there, get a cup of coffee, and then go for a bit of a training session in the academy.
I love that. Really cool. Yeah, it's fascinating how many Bitcoiners are also in combat sports and like jiu-jitsu and all of that. I think Brazilian jiu-jitsu is. I heard a lot that people tell me like I should get into this.
It's fun because like I do a lot of these kind of podcasts and appearances. I appear on Australian television as well. So I can't come in with like a black eye or a busted head or, from doing boxing or striking or something like that. So jiu-jitsu is good. You can get that out of your system, and then you can come in the next day, put your suit on, and nobody knows what you were getting up to the day before. It's not as intensive as if you were trying to get, strikes to the face. It's you can still be a public personality and people not questioning whether you're getting into bar fights in the weekend.
I will consider that. Thank you so much, man. We have an end routine where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, outside of quantum, what is the biggest risk that you see currently to the Bitcoin investment thesis?
Bitcoin only living on balance sheets and in cold storage. That is the biggest risk, in my humble opinion, that if Bitcoin only becomes a store of value asset, and we solve the quantum problem, and it just sits on balance sheets and sits in cold storage, then yeah, we haven't really changed anything and we haven't achieved anything as a network. So that's the biggest risk, is us not becoming an accepted means of exchange.
Awesome. Yeah, I 100% agree. It's very important that people take self-custody and people take their Bitcoin journey serious. Thank you so much, Bisher, for being on. Before I let you go, where can people find you, StormRank, and all the things that you're doing?
Yeah, come to stormrank.com. We're a full-service broker based in Australia, servicing Australians and Americans. So that's how you can find us. And then you can email us on trade@stormrank.com or give us a call on the number on the website. Nice and easy.
Awesome. Thank you so much for being on the podcast. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.